The stock market experienced significant volatility and interest around Donald Trump's assumption of office as the 45th President of the United States in January 2025. The period before and after his inauguration was marked by shifts influenced by his campaign promises, policy announcements, and geopolitical actions. During this time, market sectors like financials, energy, and defense saw a rally due to expectations of deregulation, infrastructure spending, and increased military budgets. Forex markets also responded to Trump's policies, particularly his stance on trade tariffs, tax reforms, and relations with key trading partners such as China and Mexico. The US dollar strengthened initially, reflecting optimism over potential fiscal stimulus and tax cuts, but fluctuated later due to concerns over trade wars and geopolitical tensions. Stocks related to industrials, infrastructure, and technology also drew attention, driven by expectations of significant domestic investment and regulatory changes. Geopolitical actions, including shifts in U.S. foreign policy and sanctions on other nations, further created market opportunities and risks. Investors carefully monitored Trump's rhetoric and early executive orders, shaping portfolio decisions to align with anticipated policy impacts on different sectors. The period surrounding Donald Trump's ascent to the presidency was marked by dynamic shifts in global financial markets, driven by his campaign rhetoric and subsequent policy agenda. Before Trump took office, expectations of sweeping changes to U.S. economic policy led to a phenomenon known as the Trump trade. This resulted in a stock market rally characterized by sector-specific gains. The Dow Jones Industrial Average and the S&P 500 hit record highs, bolstered by optimism about tax cuts, deregulation, and infrastructure spending. The financial sector, in particular, surged on expectations of reduced banking regulations, higher interest rates, and a more favorable business environment under the Trump administration. In the Forex markets, the U.S. dollar experienced a robust rally immediately after Trump's election victory, as traders anticipated stronger economic growth and inflation under his pro-business policies. The Trump bump in the dollar was also fueled by expectations of a more hawkish Federal Reserve, which hinted at further rate hikes. However, currency volatility persisted as concerns about trade policies, particularly potential tariffs on imports and renegotiations of NAFTA, created uncertainty. Geopolitical events also played a significant role. Trump's tough stance on China and promises to impose tariffs led to speculation about a potential trade war, which had implications for stocks in export-heavy sectors and emerging markets tied to U.S. trade. Meanwhile, his pledges to rebuild infrastructure spurred interest in industrial and materials stocks, with companies involved in construction and raw materials seeing significant inflows. Defense stocks benefited from promises of increased military spending, while energy stocks were buoyed by plans to roll back environmental regulations and promote fossil fuel development. On the other hand, sectors like technology and renewable energy faced uncertainties due to potential policy clashes, including restrictions on H-1B visas and skepticism about green energy initiatives. In the months after Trump took office, markets continued to respond to his administration's actions, with specific events, like the introduction of the Tax Cuts and Jobs Act and escalating trade tensions with China, shaping investment strategies. The interplay of fiscal policy, geopolitical maneuvering, and global economic dynamics during this period offered both opportunities and risks, requiring investors to remain vigilant and adaptive. The transition period surrounding Donald Trump's presidency was a time of heightened activity in global markets, with significant implications for stocks, forex, and commodities. Investors anticipated a wave of fiscal reforms and policy shifts that would reshape the economic landscape, leading to speculative positioning in key sectors. Stock market dynamics. Before Trump took office, optimism about his pro-business agenda, focused on tax reforms, infrastructure spending, and deregulation, created a Trump rally in the equity markets. Financial stocks saw substantial gains due to expectations of deregulation under a rollback of the Dodd-Frank Act and rising interest rates, which promised to boost banking profitability. Industrial and materials stocks also thrived, driven by Trump's $1 trillion infrastructure proposal, which promised to revitalize America's aging roads, bridges, and airports. Similarly, defense stocks experienced strong upward momentum, reflecting anticipated increases in military spending. Energy stocks were another major beneficiary of Trump's election, as his administration promised to revive coal, expand oil and natural gas exploration, and roll back environmental restrictions. This aligned with rising global demand and OPEC's production decisions, creating a favorable environment for oil and gas companies. Conversely, technology and healthcare sectors experienced mixed reactions. While tech stocks initially faced concerns over potential restrictions on skilled immigration, H-1B visas, they later regained momentum as broader market sentiment improved. Healthcare stocks reacted to the uncertainty surrounding Trump's vow to repeal and replace the Affordable Care Act, with insurers and pharmaceutical companies showing volatility. Forex market reactions. The forex markets were equally reactive. The US dollar index surged to multi-year highs after Trump's election, reflecting optimism about anticipated fiscal stimulus and higher interest rates from the Federal Reserve. However, this strength created challenges for emerging markets, as a stronger dollar increased the cost of servicing dollar-denominated debt. Trump's protectionist rhetoric, particularly regarding tariffs on China and Mexico, added pressure on currencies like the Chinese yuan and Mexican peso, both of which depreciated significantly during this period. Geopolitical tensions further influenced forex trading. For example, Trump's critical stance on NATO and unpredictability in foreign policy decisions created a risk-off sentiment at times, leading to safe haven flows into assets like the Japanese yen and Swiss franc. Brexit developments in Europe also shaped forex movements, as Trump expressed support for the UK's decision to leave the European Union, adding to uncertainty around the euro. Geopolitical actions and market sentiment. Geopolitical risks were a key driver of market sentiment, with Trump's administration signaling a sharp pivot from traditional U.S. policies. His confrontational approach to trade relations, especially with China, set the stage for escalating trade tensions. These developments not only impacted equities in sectors reliant on global supply chains but also weighed on commodities like soybeans and steel, which became focal points in tariff battles. The anticipation of a more isolationist U.S. stance created ripple effects across global markets, influencing capital flows and risk premiums. Emerging markets faced outflows as investors prioritized U.S.-centric investments, while European markets contended with uncertainties surrounding the Transatlantic Trade and Investment Partnership, TTIP, and other agreements. Post-inauguration market trends. After Trump took office, the market's focus shifted to the implementation of his policies. The Tax Cuts and Jobs Act of 2017, which reduced corporate tax rates significantly, provided a boost to corporate earnings, driving further gains in U.S. equities. Trade wars became a defining feature of his presidency, with tariffs on Chinese goods prompting retaliatory measures and impacting global supply chains. While the immediate market reaction to these trade disputes was negative, some U.S. domestic-oriented sectors, like small-cap stocks, benefited from a reduced reliance on exports. The combination of fiscal stimulus, deregulation, and protectionist policies created a complex environment for investors. While certain sectors thrived, others faced headwinds from increased costs and geopolitical uncertainty, underscoring the importance of sector-specific and geographically diversified investment strategies. This period highlighted the interplay between politics and markets, as Trump's unconventional leadership style continually influenced investor behavior and market dynamics. In conclusion, the period surrounding Donald Trump's transition to the presidency marked a transformative era for financial markets, driven by expectations of pro-business policies, fiscal reforms, and geopolitical shifts. Stock markets experienced sector-specific rallies, with financials, industrials, defense, and energy stocks leading the charge due to anticipated deregulation, infrastructure investment, and increased military spending. In contrast, sectors like healthcare and technology faced uncertainties tied to policy changes. Forex markets reflected the strength of the U.S. dollar amidst optimism over economic growth and higher interest rates, but volatility emerged as protectionist trade policies and geopolitical tensions impacted global currencies. Emerging markets, in particular, faced challenges due to dollar strength and trade disputes. Geopolitical risks, including trade wars and foreign policy shifts, added layers of complexity for investors navigating this dynamic landscape. Ultimately, Trump's presidency underscored the significant influence of political and policy decisions on financial markets. For investors, the period highlighted the importance of strategic asset allocation, sector-specific analysis, and adaptability in responding to rapidly changing economic and geopolitical conditions.